Ladies and gentlemen, good day and welcome to the GTPL Hathway Limited earnings conference call hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touch-tone telephone. Please note that this conference is being recorded. I will now hand the conference to Mr. Pranav Kshatriya from Emkay Global Financial Services Limited for opening remarks. Thank you, and over to you.
Thank you, Ryan. Good evening, everyone. I would like to welcome the management and thank them for this opportunity. We have with us today Mr. Anirudh Singh Jadeja, Promoter and Managing Director, Mr. Piyush Pankaj, Business Head, B2B and Chief Strategy Officer, and Mr. Saurabh Banerjee, Chief Financial Officer. I'll hand over call to Mr. Anirudh Singh Jadeja for his opening remarks. Over to you, sir.
Thank you, Pranav. Good evening, everyone. Warm welcome to everybody to the earnings call of GTPL Hathway to discuss the financial and operational performance of Q1 FY26. We continue to lead as India's largest MSO providing digital cable TV service pan-India, and we are proud to be amongst the country's leading private wireline broadband providers. We have sustained our subscriber base in the cable TV division and have grown our base in broadband business in the face of dynamic and competitive landscape. This consistency reflects the strength of our customer relationship, the reliability of our service offering, and the ability of our team to adapt in a challenging environment. I now hand over to Mr. Piyush Pankaj to walk you through the KPI of our cable TV and broadband segments and to share insight of our achievements in the first quarter.
Thanks, Mr. Jadeja. Good evening, everyone. The usual KPIs for both the businesses are as follows. First, cable TV segment. Our digital cable TV subscriber base as on 30th June 2025 stood at 9.60 million. Among the total subscriber base, paying subscribers stood at 8.90 million. The total business partners count now stands higher at more than 48,000 plus, and they remain key enablers of our quest on expanding our pan-India presence. In the broadband business, active subscriber base at the end of the quarter stood at 1.05 million, adding 20,000 new subscribers, which is an increase of approximately 2% on a YOY basis. Home pass stood at 5.95 million, having added 50K new home pass on a YOY basis as of 30th June 2025. Of all available home passes, 75% are available for FTTX. The broadband ARPU for Q1 FY26 stood at INR 465, increased by INR 5 as compared to Q1 FY25. Average data consumption per month stood at 410 GB and 17% increase YOY. We constantly keep evaluating options for either organic or inorganic avenues for growth in both the business segments and bundled product of cable, broadband and OTT. We continue with our expansion plan in other states across India and want to increase our total addressable market. Regarding the HITS platform, we are on the verge of obtaining all necessary regulatory approvals for operationalization of platform. We are looking forward to start the operations in coming quarters. We will provide details of the same at the time of operationalizing the platform. I will now hand over the call to Mr. Saurabh Banerjee, who will take you through the financial performance of the company.
Thank you, Mr. Piyush. Good evening to all the participants. For the quarter, on a consolidated level, our total income grew by 7% year-on-year and 1% on a quarter-on-quarter basis to INR 9091 million. Subscription revenue saw an increase of 1% sequentially to INR 3018 million. The broadband revenue stood at INR 1359 million and registered a growth of 1% on a yearly basis and is stable sequentially. Consolidated EBITDA stood at INR 1123 million with an EBITDA margin of 12.4%. Net profit for Q1 FY26 stood at INR 105 million. Now looking at the standalone performance for the quarter. our total revenue grew by a healthy 10% YOY and 5% sequentially to INR 5,990 million. Subscription revenue saw an increase of 8% Q-on-Q and largely unchanged YOY on INR 2,250 million. Standalone EBITDA stood at INR 592 million with an EBITDA margin of 9.9%. Net profit for Q1 FY26 stood at INR 56 million on a standalone basis. Overall, our consolidated operating EBITDA stood at INR 1042 million in Q1 FY26, registering an operating margin of 22%. I would now request the moderator to open the floor for the Q&A session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Kunal Tokas from Fair Value Capital. Please go ahead.
Hello, am I audible?
Yes, Kunal, please go ahead.
A bit loud, Kunal. Yeah.
Yes, sure. The first question is, if you can, please tell me what your ranking in terms of size in the wired broadband market in Gujarat would be.
Ranking in the size of the wired broadband.
Yes. I mean, how large would you be in that market? Would you be number 1, number 2, or 3?
We are number 1 as per the last report which we got, which is in 22-23. We are number 1. Still, we are number 1, which is there.
In the wired broadband market, right?
That's right. That's wired broadband market.
And is there a large gap between number 1 and number 2, or are the top 3 pretty close together?
Not pretty close, because out of 1 million subscribers which we have, we are mainly into the Gujarat, as we always say.
Okay, most of your 1 million are in Gujarat.
That's right.
Okay, sir. And the next question is about capex. We can see very large capex figures over the years, and just wanted to confirm if all of this most of this relates to set-top boxes.
No, the capex for the Q1, as we gave you the guidance in the last call also, that the capex for this year is going to be somewhere between 350 to 400 crore, which we usually do. This quarter we did around 79 crores of capex on a relative basis, where we did in the broadband, it is around 30 crore has gone into broadband and 50 crore has gone into the CATV.
What exactly is this capex? What are you spending on?
Come again, sorry Kunal.
What exactly is this capex? What are the things that you are
in the CATV business? It is STB and other network materials, and in the broadband it is the CPE and the home pass materials which we use.
Okay, so the bulk of it is on STB.
That's right.
Expansion or because the shift?
Because of that, the maintenance capex has gone up in the whole.
And so just one last clarification, we shoot the same cable.
Yeah, we the whole.
So how many of?
But 40% currently.
And vice versa, customers would be availing of.
That data we don't have for other, at least in the urban areas and all areas, the broadband must have been penetrated. But we don't have.
But do you get any cost benefits having cable into customers' homes, especially maybe rural, semi-urban areas?
That's on the capex side. Capex side is there that we get some capex benefits. Plus, we get the office, manpower, administrative, all those things benefits, because we are already present there in the cable side. We already have the insight in the market. We already have manpower over there. Already have the knowledge of those markets. So those are the soft benefits which we get. Plus, if our network is good on that market, with some improvement, we can provide the internet also on that. So yes, we get the benefit.
That should mean you should also be the cheapest provider in those markets, right? Where you have cable customers and the entire setup.
Not going on that way, but yes, if we want to leverage that, we are, and we are leveraging it in a lot of places.
Okay. Thank you very much, sir. Have a good day.
Thank you. The next question comes from the line of Nisha Murthy from MI Capital. Please go ahead.
Hello, sir. In the light of rapidly evolving digital infrastructure landscape in GTPL, so is GTPL actively exploring strategic alliances or acquisitions aimed at strengthening its regional footprint or accelerating technological advancements?
Yeah. Technology is, we have our partners. As you see that there's a slide which we have given that what partnerships we have with the technology partners, which is best in the industry. That is slide number 7 in the presentation, in the investor presentation. So yes, we look forward for best of technology partners in different areas, in you can say different area of technology. So yes, we are looking forward and always ready to partner with good technology players in the market.
Also, especially, are there plans to partner with startups or OTT platforms or broadband innovators to enhance the delivery mechanisms and diversify offerings or improve last mile connectivity?
Yeah. We are already doing it with the digital service partners. It's like Backnot is there, Distro TV is there, OTT Play is there. We have given there the details, and we are exploring for others also who can give us better services for our customers. Because here we are not the OTT player, we have to aggregate that. And same is for the channel also. As you know that the channels belong to Star TV or Zee TV and all. We are the aggregators of those channels and distribute it to the customer. Same way it is for the gaming services and all. This is Blacknut which is giving. So gaming service providers are different. We become the aggregators there. Same like on the OTT side, we become the aggregators there and we provide it to our customers. So in the last, we have the pipe which is going into the customer household. So we have to see that we can aggregate all type of services which are required for the customers and provide it to them.
Okay. And how are these growth levers being evaluated in the context of it has been seen that there is a rising demand for high-speed internet and personalized content consumption?
This is not a platform to do that because it depends on a lot of criteria as we can understand. And then our technology team gets involved in that. Our experts get involved in that. The CTO, the CIO, the digital experts, all those get involved in that. So that's the way. And we have a standard process that how we can do it. And best in the industry, I will say. But yeah, we do evaluate on that way. But I don't think this is the platform to talk about that, those criteria.
Yeah, okay. Also, as OTT platforms continue to redefine content consumption across India, so how is GTPL evolving its business model and services offering to be competitive in the environment? Particularly, I'm talking about in Tier 2 and Tier 3 market, where traditional cable still holds a major part.
See, the world is going towards the layered services, and you have to go for that. As depending upon the consumer demand, you have to provide what they want, and you have to study because already that changes have started happening in the urban areas and all. That will continue to do in India in the semi-urban and rural areas also. You have to be prepared for that. So that's what we are doing, that we are combining entertainment, broadband, OTT, gaming, other services all together, and that's the way to go. That's the transformation which we are doing in the whole company, in our product line. That is the case. Yes, we are prominent CATV provider, number one in India, and we are going to exploit that for adding the layer of services and to keep our customers intact.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Anubhav Goel from Cosma Ventures. Please go ahead.
Yeah, hi, sir. Just wanted to confirm, 9 million cable customers and 1 million broadband customers. 90-95% plus would be from Gujarat, right?
No. In the cable side, you talked about in the 9 million, we are all over India. On the 9 million, hardly 1.7, 1.8 million is in the Gujarat line, which is hardly 20%. So 20% is in Gujarat, the rest is in all over India. We are present in 26 states. And in the broadband, if you see, we are present in 11 states, but yes, around 77 to 78%, close to 80% customers are from Gujarat in the broadband side. The rest are from others, as in other states we have started just now. It's like 1 year back, one year, like 4 quarters to 5 quarters back. So that's why.
So you said 20% in Gujarat for cable. Can you give the share for the next 2 states?
Next states you talk about?
In terms of share, in terms of higher share.
Nadu, we have around 12 to 30%. Andhra and Telangana together, we have around 13 to 14%. South in Karnataka, we have around 4 to 5%. Maharashtra, we have around 8 to 9%. Talk about Northeast in overall scenario, we have around 7 to 8%. Bihar, Jharkhand, we have 8 to 9%, 7 to 8%, 7% you could say. 6 or 7%, yes. So like that, it is all over India.
Got it, sir. So, sir, in terms of the growth outlook, from a very long-term point of view, is it fair to say that the growth we expect will largely come from broadband? Like over time as people opt for fiber, cable, so this 1 million number which we have can go up higher. So this would be the prime growth driver for us, right?
No, you look into another way that out of around 340 to 350 million households, only 200 million households are, around 200 million households are TV households right now. So spread 140 to 150 million households are where the TV is not there at all. And they are into the rural, they are into the areas or cable dark areas and TV dark areas are there in India. So that's why one of the strategy which we have gone for the header in the sky, which is the satellite, so that we can cover all over India footprint in the one go. And we can start providing the CATV services all over India. So that's on the CATV side. So still you have a very big opportunity. Apart from that, you have the opportunity that out of around 80 million cable numbers, which is out of 200, only organized players just have around 35 to 40 million. So still 40 to 45 million is with the smaller MSOs and the smaller players, where the opportunity is large for the consolidation. So it's a large opportunity which is there in the cable side also. Plus, the second will come into the broadband side. Broadband, if I talk about out of say 50 million households, say 40 to 50 million households, hardly 37 to 38, maximum 40 million households are there in the wide broadband, which is hardly 12 to 13%. So there is a large scope that it will go up for the decade, and it will go up in a very good way. Wide broadband, which is more sustainable and which will remain cost effective for the household. So both the businesses have a lot of opportunities right now. Plus, as you combine both, that broadband plus entertainment, plus you bring more content on that OTT, start putting more of layering of the services on that, more services on that, then you can make more customers effective. So that's the strategy which we have to go. So the opportunity is in India, both sides, both the businesses opportunity is very large. You just have to tap that in the right way and the right strategy, and both businesses will grow.
Got it, sir. So, sir, between the two, over time we would expect the broadband ARPU from 460 to at some point start going up. Is that a fair assumption?
I can't say that this business, that business, both the businesses will grow. Yes, the CAGR will be more in, the growth CAGR will be more in broadband, as you know. As I said that it is just 10 to 12% penetrated in the market right now in the India. So yes, CAGR is going to be higher in the broadband side.
Sir, here you mentioned, and I've heard you in the previous few calls talk about it. Can you, are we now comfortable sharing more details on this? On what is the technology, what cost savings do we expect?
I think this is not a platform, as you know, we just have limited time to do that. I think we should, if we want to do that technology and all, we should do it offline. That's what technology will prevail and what will not, or how it will shape the whole industry.
All right, sir. All right. Thank you. Thank you so much.
Thank you. The next question comes from the line of Shaurya Panyani from RF Partners. Please go ahead.
Hi, am I audible?
Yeah.
Sir, given the growth prospects, what kind of revenue growth can we expect? Can we grow 18 to 20% this year?
As you see, this quarter we have grown around, YOY, as you see, we have grown around 7% in this quarter. And last year, the year-wise, if you see, we have grown around 10 to 11%. So yes, the double figure is going to be there, both in the revenue side and all. But achieving straight back to 20%, which we did around 2 to 3 years back, is still we have to watch. We have to see that how we can do it. But yeah, it's going to be the double-digit growth in the business.
And what is regarding margins? We have seen year-on-year margins have declined. So what's your view regarding margins and why they have declined?
Operating margin, if you say it is operating margin, which you can see in the slide number 22 in our investor presentation. The margin has not gone down. Yeah, you can say by 100 basis points it has gone down from 23% to somewhere 22%. Quarter to quarter. So yes, we are looking forward that as you know that some of our capex is going into the hidden in the sky on the platform because we are doing it through the internal tools and all. So once the platform will be launched and then we start getting more subscriber base and we start getting more of the money towards acquisitions and all, we are looking forward that again we are going to have a healthy margin between 23 to 25%, which was there. Of the operating margin of 23 to 25% again back to that. Right now we are at 22%.
So when this new platform will be live?
As I said that on the head side, on a regulatory front, we have already signed grant of permission agreement with NAMIB for operating for 10 years and already submitted license fee of rupees 10 crore, bank guarantee of rupees 40 crore, and we have already taken NOCC for satellite transponder frequency. And we are at the last stage of taking wireless operation license, and then we will going to operate the platform and services. So we are looking forward that somewhere we are going to launch by this quarter only, which we are looking forward. But we'll see that either this quarter or early next quarter we are going to definitely launch. So that is the case.
Okay, sir. Okay, that helps. Thank you.
Thank you. The next question comes from the line of Vivek Gupta from Star Investments. Please go ahead.
Yeah, hi. Am I audible?
Yes, Vivek, please go ahead.
So my first question is to the CFO. Usually the trend is that our consolidated tax expenses are in the range of 24 to 26% of PBT.
I do apologize to interrupt you, Vivek. We have lost the line of the management. Please stay connected while I rejoin the management.
Sure.
Thank you.
Yeah.
Hello.
Ladies and gentlemen, we have the management reconnected. Vivek, if you can please ask your question once again.
Sure. Yeah. So my first question is to the CFO. Usually the trend is that our consolidated tax expenses are in the range of 24 to 26% of PBT. However, any particular reason why the tax expense has gone so up during the June 2025 quarter? That is almost 40% of the PBT.
Yeah. Just a moment. So normally the tax rate is, as you have just mentioned, that is the range at which the tax rate is there normally. But in this quarter, the profitability has increased to a certain extent because of broadband. And also there are some impacts that have been taken of deferred tax. So a combination of that factor is leading to, arithmetically that percentage looking higher. But on an overall basis, if I were to, look at the tax percentage, it is in the range of the same 25-26% that we usually have. So there is no real increase in the percentage.
Okay. So, can you just give me an idea, why was it unusually low in last quarter, that is Q4 FY25, which was 3% of the PBT?
Yeah, so as I said, that there are always some tax adjustments on the deferred tax front. And we cannot just unilaterally look at a percentage, on a plain arithmetical basis. So we have to consider the entire tax workings, and accordingly, whatever is the percentage or actual amount which comes out as the tax. So it is not the percentage which determines the amount. It is the amount which determines the percentage.
So if you refer to the presentation, slide number 21, you will see that we have given finance cost as in two parts. Just for that clarification, that what is the finance cost on borrowing and what is the finance cost as per the Ind AS 116, which is more of a deferred, taking care of deferred and all. Just to give that comfort.
Greater clarity.
To give greater clarity to everyone. So refer that slide number 21 in the investor presentation, please.
Slide number 21, yes. Give me a moment. Yeah. I'm on slide number 21. Yeah. So,
yeah.
3 and 49. We're talking about 3 and 49. Yes, Vivek, we can go for the next question.
Yeah, we can go for the next. So my next question was, the broadband ISP revenue has remained the same quarter on quarter and largely same on YOY basis too. Given that presentation mentions subscriber growth of 2%, taking an average of 1%, largely the broadband growth is due to subscriber growth, then it seems. Where does the ARPU gain fit into the equation? Or is it that the gain was due to ARPU and that bulk of new subscribers were added closer to end of the quarter?
No, it is. ARPU remains same as we are providing we have not increased the price or decreased the price in the market. Whatever some ARPU here and there is happening because of change in subscribers from lower package to upper package or upper package to lower package, something like that. But ARPU remains same. We have not decreased or increased the price in the market in the last 1 year.
So, what measures are being taken to increase revenue from this segment?
Measures to increase the revenue in this segment is more of how you are going to increase the volume and how you are going to increase the volume, number of subscriber base and all in this market. So that's why, the growth strategy is that already we are present in Gujarat, and we have around out of 5.95 million home passes, we have around 5 million home passes in Gujarat. And in Gujarat, we have the penetration of around somewhere around 17 to 18%, you can say. 17%. 17 to 18% penetration is there in the market. And this business is totally B2C business. We are giving the services directly. The GTPL is giving the services directly to the consumer. It's a B2C business we are doing. So still there is a lot of scope that we can extract more from those 5 million, which we are trying to do. And we are hopeful that as the things will improve, we will do it. The second is that to launch, right now we are in more time stage. We have just launched. And we still have, if you see in the cable side, we are in 26 states. So still around 15 states are left where we have to launch. But plus we have to penetrate more on those markets. We are doing the B2B and B2C both on those markets. And prevalent is B2B. As we say that we have 48,000 plus operators with us. And we have to explore that through operators, how much you can bring it for the broadband and how you can provide the combos to those combo products to those customers. So that's the way we have to go. And so Gujarat markets, we are going to put more money in the capex and all and bring more customers and all. And outside, we have the dual strategy for going into for putting some of the capex also and going to our partners also. So that's the way we are looking forward for the broadband business. And so we are pretty sure that we will get into that growth mode again in that way. Right now, yes, as we are investing in the new platform, so we are using the money from that platform in the capex side. And once that will be over, this is the last quarter, I can say, then the more focus will be on those sides.
Okay, thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Rahul from Count Capital. Please go ahead.
Hi, sir. Good afternoon. Can you hear me?
Yeah, Rahul. Please.
Yes. Hi, good evening. So firstly, in the previous call, Q4, you had mentioned, FY26, it seems to be that you can touch that 500,000 subscriber addition. Is that something you see happening?
Yeah, we are looking forward for that, right, actually. So, already things are in the place. We have waited for this quarter so that we can complete our Live in the Sky platform. Otherwise, things are already in the place. So, we are looking forward that we will achieve that.
Okay. And if you could, speak about the BharatNet opportunity for GTPL, what's the current outlook and our position there?
BharatNet, right now we are hopeful for the Gujarat one. So already we are looking forward that tender will get open in next 1 month or 1.5 months time. So we are hopeful for that. We have the capability. We already did the BharatNet project. So we are looking forward that we will participate there. And so still keeping the fingers crossed.
Okay, and that would currently just focus on Gujarat, right, for the BharatNet?
That's right.
Yeah, okay. The EBITDA margins, they have, consistently stayed around 11.8, almost 12%, last 3 quarters. So, even this first quarter, same EBITDA margins. So what kind of improvement do you see, going ahead, coming 3 quarters? Can we end on a higher level for FY26 compared to the last year?
Rahul, that is, we are looking forward that EBITDA margin will go up, but I will say that it's better to look at the operational EBITDA margin, which we are at 22%, which I said that in the investor presentation, that slide number 22, as that gives the better health of the business which is there. So we are there, if you see that we are still at 22%, and we are looking forward that will go up to between 23 to 25%. And this 11-12% also, we are looking forward that it will go up.
So, sorry, 22% you're currently at operating EBITDA, and you see it going to 24-25 by a year end, you think?
Yeah.
By year end. Okay. And lastly, if you could just repeat for me the capex which you are planning, right? 350 crore, right? I believe you mentioned for the year. Can you already spend around 80 crores, I guess? The remaining, can you just tell me where will you be spending majority of it?
Yeah. So majority is going to be on the CATV as it improves the hits also. So out of 350 crores, we are looking forward that somewhere around 200 crore will be on the CATV side, and 150 crore will be on the broadband side. And CATV.
Sorry, 150 on the what side?
On the broadband.
Platform.
Broadband.
Okay, broadband. Okay.
Broadband business is 150, 200 is going to be the CATV, which includes the platform.
Right, okay. Okay, sir. Thank you and all the best to you.
Thanks, sir.
Thank you. The next question comes from the line of Riddhi Shah from SAS Capital. Please go ahead.
Hello. Thank you for the opportunity. My first question is, why did we see a revenue degrowth in this segment? And did IPL viewers not aid the segment?
You are talking about which segment? Sorry, Riddhi. Why so a bit?
We want to know about the cable TV revenue or degrowth.
Big growth in the cable TV revenue. If you talk about Y to Y, quarter to quarter we have gone up by 1%, but the subscription income is down by rupees around 18 crores, which is 5% YOY. So, the industry witnessed higher churn during FY25, as the invent of expansion of different content providers in the industry, including telcos, university players, social media sites, etc. GTPL, we have increased our revenue by 1% in this quarter to quarter, and we are hopeful that coming quarters will be more positive in that way. So last quarter, the churn were higher because we have seen the telcos have come out with the schemes with entertainment and all in the way, and that is put some pressure on that. Plus, we have seen that the free GTPH is gaining the market in the rural side because they have started providing more and more channels. And again, some of the broadcasters, paid broadcaster channels have come back in the last 1 year. So those are the factors, but yes, we are hopeful that it is marginally gone down. And again, we are going to recover this in the coming quarters.
Okay. My next question is, why revenue growth in subscription income of CATV was flat on standalone basis? It was down on consolidated basis also. So I want to understand which subsidiary and what geography is seeing some pain.
Yeah. So as you know that we have presence in Karnataka and Maharashtra markets through one of our subsidiaries. So there we have lost a bit of market, and we have gained in the GTPL side, but we have lost in the JV side. So some of the revenues which you will see in the console side, it is going down. But yes, in the standalone, it is flat. It is at 0% of that. So yes, one or two subsidiaries has not done well, especially in the international market. So because of that, we have seen this 5% down in the console.
And how do you plan to achieve growth in this cable TV segment?
Cable segment is, as you know, as we talked about the Hidden in the Sky platform. So I explained that. One is there is cable dark areas. There are rural areas where we are not present. There are a lot of big opportunities on that all over India. Plus, I talked about that there is a imminent consolidation in the market where you can get 40-45 million of subscriber base in the consolidation. So all those big opportunities are there which we have to explore, and we have to start getting the market.
Okay. Now, when I do a rough bridge between the profitability on a standalone and consolidated level, right from the EBITDA level to the PBT and then a PAT level, the incremental numbers from subsidiary shows a marked improvement on a sequential basis and on a year-on-year basis. Incremental EBITDA contribution like subsidiary for Q1 FY26 is odd like 531 crores, which is up to 10% YOY, and PBT is around 44 crores, almost 3.5 times higher the contribution by subsidiary in Q4 FY25. So can you share what the changing in the subsidiary operations? Why such a difference in performance of standalone business profitability and subsidiary?
So you are talking about that subsidiaries did better in the last 1 year.
Yeah. So now we can see that there is some changes in the subsidiary operation. So why such there is a difference in performance of the standalone business profitability and subsidiary?
See, what is happening here that a lot of synergies benefit which subsidiaries are getting once they are into the us with us. And those synergy benefits, you will see that in their books, they are getting it. Being associated with the GTPL, those subsidiaries or those like the companies are getting a lot of benefits out of that. And that's the reason that we are seeing that if you compare on that basis, their performance are better, but their performance are better because they are associated with the GTPL, or they are part of the GTPL group. So that's the way, but yes, we look at it in the holistic way rather than individual books level. That's why we always prefer to go on the consolidated results rather than the standalone concentration on that side, because if it is going into the JV books also, we are happy to do that because the synergies, you can say the synergy benefits are going over there. So that is the case.
Okay. Thank you.
Thank you. We take the next question from the line of Rahul Jain from KB Securities. Please go ahead.
Hello. Am I audible?
Yes, Rahul. Please go ahead.
Yes. So my question was with regards to GTPL's partnership with OTT Play Premium. With OTT Play's curation set and personalization engine, how do we differentiate our value proposition from other streaming aggregators in the market, since we have also been offering access to OTT already on GTPL Genie app?
Yeah. So Genie app, Genie app also we have aggregated all the different OTT players. We have aggregated and started putting the Genie and Genie Plus. But right now, a lot of agreements are getting expired with the individual OTT players. And that's why we wanted to go for the aggregator, like a OTT player who is providing the whole thing together. And that's why we have gone for the OTT play on that way and replaced a lot of things on the Genie. So whoever has still on the Genie Plus and all, the subscription, still they are on. And whoever is coming the new, they are into the OTT play. Because the agreement with the individual OTT things which is getting expired.
Okay. And could this partnership pave the way for more intelligent recommendation systems tailored to regional viewing preferences?
Yes, they are going to do that. All those benefits will come into us.
And is there potential for strategic cross-industry tie-ins like telecom or retail to boost subscriber acquisition through bundled offerings?
Yeah, that's what we are doing. We are doing the bundled one. Even we are in touch with the cross bundling and everything. Other players also.
Okay. And on a different note, can you share some KPIs related to your latest announcement? How many downloads of the consumer app and how many people have used the Samsung TV Key Cloud OTT subscriptions through our application? And finally, how has that translated to you in terms of subscribers churn? Have you seen some slowing down in that churn?
I got your point. I think we have to offline we have to do this because we don't have the real data available for those downloads and all.
Okay. All right. That's all from my side. Thank you for taking my question.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. As there are no further questions, I would now hand the conference over to the management for their closing comments.
Yeah. Thanks. I would like to express my thanks to every participant who took their time out to attend the call. I would like to thank MK for organizing this call. For any queries, please free to contact with MUFG IR, who are our investor relations advisors. Thank you and have a good day.
Thank you. On behalf of MK Global Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.